welcome to the sixth episode of the Tech Wealth Chronicles, the podcast where we break down markets, money, and everything in between. I'm your host, Vanisha.
And I'm Kedar. And today is an extra special, the Diwali edition. The festival of lights, new beginnings, and of course, a time to explore fresh new opportunities to expand our wealth.
This podcast is meant for informational purposes only and does not constitute any investment advice. Please consult your financial advisor before making any investment decisions. Associates and directors at CrispIdea may hold these stocks mentioned in the podcast. Thank you. For this edition, we have curated 15 best stock ideas for Samvat 2082. They are carefully selected through our research and AI models.
And to help us decode the market, themes, and these 15 stocks, we have with us Mr. Malay Shah, our co founder and principal advisor at CrispIdea.
Hello, happy Diwali everyone, and wishing you a very happy Samvat 2082 as well.
Okay, so Malay, let's start with a quick look back. So, how would you sum up Samvat 2081?
Yeah, Samvat 2081 was a little bit of a roller coaster ride for Indian markets, if you were to look at it that way. Nifty made an all-time high in September of 2024, just a couple of months before Diwali, at about 26,200 levels. And then we saw 5 months of continuous selling, October, November, December, Jan, Feb. FIIs continuously sold into Indian market. We made a bottom of around 21,900 odd levels. The markets then started rebounding back in March, April, May, and June. So markets, started to move up higher. But again, we hit an air pocket again in the month of July and August. So we had some amount of correction, and again now markets have started going up once again. But if you really look at from a year-to-year basis, I think last Muhurat Trading on November 1st of 2024, we were at about 24,300 odd levels. We are mildly above that level at this point in time. So yes, Diwali to Diwali, Nifty 50 has made is marginally upwards. But if you really look at the broader index like BSE 500 index, we are still negative. We are still below our previous year levels. And if you compare ourselves against September 2024 levels, again, we are about 3 to 4% below the previous market all-time high. So there are a number of factors which played a role, if you were to look at over the last 1 year, which led to more of a flattish market.
Okay, so despite the correction, the Indian markets have started rising back up, but I think careful stock selection was the key right now. Why didn't the stocks grow as compared to the previous Samvats?
Yeah, so this year we were hit by multiple factors. I mean, FII selling has been one of the major factors. And one of the big factors for FII selling also has been the valuation or relative valuation. So Indian markets are, currently, if you look at BSE 500, they are still at about 25 times price earning ratio. If you look at Nifty 50, that is trading around 22 times price earning ratio, which FIIs find it relatively higher compared to our own historical average and compared to, the US market potential and some of the domestic market potential. Investors found better opportunities in the domestic market, including investing in debts and bonds. So there was one big reason for FII selling, which led to a flattish market. The other big reason has been also the earnings season drought, so to speak. So if you were to look at in last 1 year, the earnings have been growing very meagerly at about 6 to 9% kind of broad range, which is again below our Indian historical average of about 12%, plus compounded earnings growth range. So the earnings have not bounced back as much as one would have liked to see out of an emerging market like India. The third big reason has also been the tariff-related news stealing headlines, which kept some of the sectors like IT, pharma, especially the export-oriented sectors in check. So a combination of all those factors, really led to markets being flattish. Some of the large cap stocks haven't done very well. Mid caps, of course, are still in an overheated territory. But overall, markets have been, market is going through what I typically call it as a time correction phase, as opposed to just the price correction phase, and that's what has happened over the last 1 year.
Okay, so that was the overview. Before we dive into the themes, let's quickly touch upon the big picture. Malay, what's the outlook for India in Samvat 2082?
Yeah, I mean, Summer 2082 potentially starts off on a positive note. As Venetia just mentioned, markets have started to inch up higher. The earning season is gradually improving. It has gotten better from 6-7% growth to now 9% growth, and hopefully we get back to about 12% growth. Government is now becoming more proactive in terms of stimulating demand. So the recent GST reforms is a sign for that. RBI has been cutting rates in the beginning of the year. Of course, currently they are on a pause, but they should potentially even cut further as we go into the year. So there are multiple positive factors which are out there, and the hope is that 2082, we will reclaim the lost ground that we had in 2081. So broadly, Indian market should continue to do well. We keep looking at multiple subsectors underneath that, underneath the broader picture, and we find, of course, the infrastructure spending is back. Private sector spending is coming back, especially when it comes to again infrastructure and investing in new factories, new plants, etc. So that is relatively positive. Hopefully, the GST will further boost consumption again on auto, FMCG. Auto numbers are started looking gradually. They are looking to improve. So I think there are multiple sectors which have already started doing well. Of course, the one big overhang, as I mentioned, is export sector, like pharma and IT. And if the trade deal concludes positively in November, or let's say in March or April, then again that could be another boost as well. So there are multiple positive demand drivers out there for India, and hopefully 2082 will be a much better than somewhat 2081.
Before we dive into our 15 best ideas, let's take a pause because Diwali isn't just about lights and celebrations.
It's about new beginnings, hope, and prosperity. Values that we use to define how we look at the market and wealth creation.
Exactly. Every diya we light represents optimism, and every good investment starts with the same belief.
So, as we explore these 15 themes, each inspired by Diwali tradition, let's see how they connect to India's growth story.
Yes, let's dive into our first one. So let's light up the start with patakas. Firecrackers or patakas symbolize the triumph of light over darkness and good over evil. Their brilliant displays light up the night sky, bringing families together in celebration. So, Malay, let's talk about the first pataka stock.
Yeah, I mean, firecrackers have been always been very special, and the first thing that that Diwali has arrived is when you hear kids lighting up all type of firecrackers on the streets, in the apartment complexes, and so on and so forth. And I think one of the first Pataka stock that we wanted to talk about is a company called Techno Electric. It's a company based out of Kolkata. They are into engineering, procurement, and construction, largely into renewables energy. They operate solar and wind farm of more than 207 megawatts. But I think the most important piece which they have gotten into right now is the whole data center infrastructure. So they are investing about $1 billion odd dollars in setting up 250 megawatt worth of data centers. And what we really like about this company is amazing amount of growth profile, and that's why we are calling it the Pataka stock. So 50% growth in FY25, continued 40% plus growth in FY26 and 27. The stock may sound very expensive at this point in time. It trades at about 45 times price earning ratio, but the forward 2-year price earning ratio is only 22 or 23 times odd. And with that kind of growth trajectory, although it seems like it is expensive, but it will really get cheap with that kind of, it's justifying its own growth profile and the valuation that it is trading at. Amazing amount of earnings quality score of 98 as per LSEG, combined alpha model score of 63. So what's not there to like about this company? I mean, they are right at the forefront of transforming the whole AI infrastructure landscape with their investments in the new business line. And we like their growth profile, we like the valuation, and one last piece, they just got about 1,400 crores worth of order just in quarter one of FY26, and they're already sitting on 10,500 worth of crores of order book already. So a classical Pataka stock that one should definitely have in their portfolio for summer 2082.
So I think Techno Electric is truly a pataka stock. So next up, what do you think, Kedar?
Next up would be Rocket. Defense is in focus with rising budgets, modernizations, programs, and growing exports. Malay, what's happening in this sector?
Yeah, so we wanted to identify another, firecracker in the portfolio for 2082, and you rightly mentioned Rocket is something. Of course, every investor wants their investment, to become a rocket, right? In terms of the rising prices, etc. But this one particular stock is actually aligned to Rocket as a philosophy, because the company that we are going to talk about is Bharat Dynamics. they are into missiles. So Akash missile, Prithvi missile, and we had our success in Operation Sindoor just on the back of missile technology as well. And this one is classically a PSU enterprise. Government owns about 74% of this company. But someone who is having more than, again, a 40% growth in FY25, again, projected growth of more than 34-35%, again, in FY26, FY27, sitting on massive amount of order book. The quarter one results were just outstanding. They had 154% year-on-year growth in profits. The CMP is about 1500 right now. The target price, as per LSEG, again, is 1728. So there's a decent 16% upside. And of course, price to earning valuation looks, price to earnings looks expensive, again, if you were to look at it from a trailing perspective. But the 2-year forward multiple sits at about 44 odd times price earning valuation. What we really like about Bharat Dynamics, or broadly this entire segment, is government is increasing the defense expenditure after Operation Sindoor. The Indian manufacturers are now getting into exports as well. So, you must have seen recently UK Prime Minister visiting India, and India signing multiple, deals. And again, missile technology and again is part of the defense deals as well. And so there is a huge export potential available for Indian defense manufacturers. So it will, at some point in time, India will not only have defense as a cost center, but it will also become a profit center. So Bharat Dynamics is one rocket stock, again, that we expect to do really well in Samvat 2082.
So our next firecracker stock is everyone's favorite Fuljari, representing engineering and industrial manufacturing. Strong order flows, capacity expansion, and rising infrastructure demand are powering this sector. So Malay, what do you think about Fuljaris and engineering and industrial manufacturing as a sector?
Fuljari is a special firecracker, right? So now anyone can play with it, including parents, grandparents, uncle, aunties, etc. It's a cute firecracker, lights up the evenings in particular. So this one, the reason why it's called Fuljari is because there's a small cap stock. It's a company which does about, it's an Indore-based company. It's called Jash Engineering. They do about 850 crore in revenue. But they are, again, powering an important aspect of India's infrastructure play, which is largely into the water area. So they manufacture gates for dams, they do valves, they do screens. So they are really powering the entire water infrastructure, hydro infrastructure, for India. They just IPO'd, I think, about a year back, less than a year back. But a company which is, having EBITDA margin of more than 19%, good earnings quality of 67, sitting on already an order book of 850 odd crores, having a good return on equity of 20.3. So it's a stock which will, keep rising steadily. And the best part at this point in time, it is trading at, again, 11% below its own, the historical P average as well. So something that you are getting at a discount. A cute little small cap stock powering a very important play of infrastructure play in India. And that's something, again, and the upside, by the way, is quite high. So the upside is more than 47% as per LSEG. Currently, the CMP is about 467, but the target price is about 685. So this could actually become a larger stock as it keeps growing and as it keeps delivering from an execution standpoint.
So these were all our firecracker stocks.
Moving on to lighting. Lighting is central to Diwali. It symbolizes prosperity and joy. Vibrant lights adorn homes and streets, welcoming guests and creating an inviting festive atmosphere. Malay, what stocks do you think would best suit this theme?
Yeah, I think the lighting is again a central part to it. To decorating our homes. But I think the major part of lighting, or major part of our lives today, is being governed by gadgets. And then one stock that I wanted to talk about, which squarely falls in the whole gadget space, is a company called Reddington. They are a IT distributor out of Chennai, headquartered out of Chennai, but they distribute mobile phones. iPhones. They used to distribute at one point in time. They distribute multiple Android phones. They distribute laptops like HP, Dell. They distribute printers. So they distribute multiple IT equipments. But I think the most interesting part about Reddington now is that they are transitioning from, of course, they are a big hardware distributor, but they are transitioning from hardware into software. And software traditionally is a much higher margin business. So they do more than about a 1 lakh crores in business, but of course they are into a very low margin business. The net margins are close to about 2 odd percent. But when they transition into software, they will distribute Microsoft products, they will distribute Azure products, etc. Their margins can go up quite significantly. The other big driver for a company like Reddington is also the data center play. So they are becoming bigger and bigger into the whole cloud and infrastructure play as well. So that's again going to be a big growth driver for Reddington. The company has been quite solid. Has been is expected to deliver steady growth of 14 to 12 to 14% over the next couple of years. It has a very strong return on equity of 12 odd percent, a great earnings quality score of 74. Does very well as a market leadership in the markets in which it operates, especially India, Middle East, and Africa. So a great stock, but I think something that one should always watch out for is the entire software as a growth driver, which could also potentially lead to the re-rating of this company. And this company trades fairly inexpensively. So at a 2-year forward multiple is only 12 times price earning ratio. So something which is also inexpensively available and could potentially get a re-rating along with the growth in the software space that it will see in the future. So truly something that could really light up our homes. It is that kind of stock.
Diwali is not just about lights, it's also about colorful art. Rangoli, the colorful floor art, symbolizes joy and prosperity. Intricate designs made with powders or flower petals welcome guests and deities, reflecting regional styles and creativity. So, what do you think this theme resonates with?
Yeah, I mean, Rangoli, as you rightly mentioned, it's about multiple colors, and it's also very close, to home in which you are celebrating. So, one stock that we have in this category is a real estate stock. It's Mahindra Lifespace. Mahindra Lifespace is into residential real estate, operates in cities like Chennai, Pune, Mumbai. But in Bangalore, they had a massive amount of success very recently. They had a massive amount of pre-sales that they were able to do. They are also into other industrial segments, which again signifies multiple different colors of Rangoli. So they are also into industrial clusters. They develop industrial parks. They have a brand called Origins, which they are developing in multiple different cities like Chennai, etc. They also operate another brand called Mahindra World City. Amazing amount of growth, 125% growth, expected in FY26. They had 76% growth in FY25. And something where there's a 39 to 40% upside available on the stock. And last but not the least is, it is available at a 37% discount relative to its own 5-year historical average. So this is a classical Rangoli stock that one should have, and it's one real estate stock that we are recommending to have it in our portfolio.
Now to the sweets of Diwali. Sharing sweets like laddus, barfis, jalebis represents joy, prosperity, and unity. Gifting sweets strengthens bonds and fosters a sense of oneness. Malay, what do you think the stocks are there? Which stocks are there in the Indian market that represent this theme?
Yeah, I think the classical mithai ka box is again very special, right, during Diwali. Um, One stock that we really think represents that particular characteristics is Adani Ports. Now it's an infrastructure stock, of course, but if you see all its other characteristics, it actually represents like mithai ka box, right? So it has got a very nice return on equity of roughly about 20 odd percent. If you see, it's got ROCE, return on capital employed, of more than 14%. Its growth profile, I mean, it has been consistently growing stock. It's expected to grow 22% in FY26 and 16% in FY27. So it kind of rounds up everything nicely. And the analysts have the price target on it with an upside of 20 odd percent as well. Now remember, it's one of the best infrastructure, from a ports perspective that India has really created with help of Adani. And they are again diversifying into multiple other areas like logistics as well, which are again the growth drivers for the company. And the best part is, because of the overhang of Heidelberg issue, most of the Adani stocks were quite depressed, including Adani Ports as well. But we now think, given the kind of clean sheet that Adani has got, and Ports has been one of the cleanest and the best business with a very good earnings quality, very good combined alpha score. We expect this stock to continue to do well. So it will be one of those classical, mithai box with assorted mithai that you get when you buy Adani Ports as a stock.
Sweets also remind us about family reunions, shared meals, and joyful connections. It reinforces love, harmony, and childhood memories. So, what do you think this theme aligns with? Is it related to metals or mining, manufacturing, maybe? What are your thoughts?
Yeah, so the family togetherness is important, but I think one of the grudge part of family, togetherness is first you have to do all the house cleaning during Diwali, and the house cleaning reminds me of one stock which is NMDC, right? Where you are actually digging and removing, stuff, removing the dirt, etc. And NMDC, which is the Mineral Development Corporation, National Mineral Development Corporation, is exactly into that particular space. They are into iron ore, but I think the interesting part about that stock is the diversification into some of the other areas, like even the rare earth metal piece as well. And entire world is hunting, going after the rare earth metal. This stock has been delivering again a consistent 12% kind of growth profile over the multiple years. The best part, it's valuation. It's one of the cheapest stocks out there. The trailing multiple is around 10. Forward multiple is about 9 odd numbers. But it can really provide a huge boost from a growth perspective. It is again firing on multiple cylinders, trying to go after multiple infrastructure projects, capacity expansions, etc. But the best part will be, especially if it gets advantage of the rare earth metal boom, which is happening all around the world, and where it could potentially get re-rated as well. So NMDC falls into that particular space. But let me talk about some of the other pieces of get together, right? So again, shopping is again one such another area, and when it comes to shopping, it also reminds me of you know um, wife and daughter buying expensive purses and bags. And one particular company which falls in the space, it's called Mayur Unicoater, which is into artificial leather manufacturing, and they supply, of course, to all the consumers around the country, but also supply into automotive, for your leather seats, for example, for your cars, and also into the footwear brands, etc. as well. This again is a good stock available at a discount of more than 31% against its 2-year forward P historical average. Relatively inexpensive. The forward multiples are 12 times, 10 times. Rarely something that you will find in a classical consumer stocks. It's of course a small cap stock, but again the LSEG analysts have a consensus price target of about 724. Stocks trades about 500 odd levels, so there's still a 45% upside available in this particular stock. So something that I align it to the shopping theme in particular. The another thing that we also keep doing again as part of family get together is small indulgences, right? So whether it is you see Coca-Cola ads during Diwali, I think, and so when you think about indulging into sugary carbonated drinks, one stock which kind of plays into that theme of consumerization is a company called AGI Greenpack. They are one of the largest packaging companies out of India. They supply into all these soft drink companies, but they are also becoming the third largest aluminum can manufacturer as well. The stock again, has great return on equity numbers of 17 odd percent. It trades at 28% discount relative to its historical average. The forward multiples again are like 16 times, 14 times. So 2-year forward multiples are again 14 times, and a huge upside potential available. So the stock trades at about 860 odd levels now. The consensus price target on this stock is about 1520. So again, a 77% upside. So something that, if you have to think about indulgence, AGI Greenpack is something that one could potentially consider. And last but not the least, again in the same bucket, I would talk about is which is a topic, a dinner table conversation these days, is the gold price, right? So everyone thinks about that Indian housewife always got this equation right when they always thought about buying gold over, let's say, buying cars. But Kalyan Jewelers is one such stock which comes, and then of course when people are thinking of jewelry shopping, people think about good branded jewelry. Things are moving away from unorganized segment to organized segment, and they have built a huge brand for themselves. Massive amount of upside available. Stock trades at about 480 odd levels, 37% upside available on this particular stock. Stock is of course not cheap. I mean, it trades at about 65 trailing multiple, but really having a great amount of growth. Revenue growth is 31% in quarter one alone. It had a profit growth of more than 50%, and expected to continue to grow at 28, 20, 25% in the coming few years as well. So the forward multiple is only going to be like 35 times. So when you factor in that particular equation, again, it really makes the stock inexpensive. The peg is only 0.88 times. So again, if you were to think of the whole family get together, right from cleaning the house to shopping to indulgences to buying jewelry, I mean, these are the four stocks that kind of fall in that particular category, Venetia.
Now on to gifting. Exchanging gifts symbolizes love, appreciation, and goodwill. Traditional gifts like sweets, decorative items, and dry fruits spread happiness and prosperity. Malay, what stocks do you think play into this theme?
Yeah, I think a lot of gifting, by the way, these days happens over mobile phone, and I think we have to talk about a digital first company when we think about mobiles, and the company that comes to our mind and which we are recommending as part of the 15 stocks is a company called FL3i. It is a company headquartered out of Gurgaon. It is into artificial intelligence led mobile advertising. Company which was enormously successful when it IPO'd, but continues to drive a consistent growth trajectory of more than 23% in 25, again 21% in 26, and so on and so forth. I think the key driver for them is they have invented a unique model called a cost per generated conversion, or cost per generated converted user. And I think that model is becoming increasingly popular. They are selling all around the world. They are having customers across Asia, North America, South Africa as well. The stock currently trades 5% cheaper than its own historical average, but the forward multiple is about 45, which potentially is still a good deal considering it's completely into AI first and tech first approach. So Apple is one of those stocks that we are recommending in this category.
So, Malay, I think we talked about gifting, lighting, shopping, and all the rituals, but now coming to the main event, which is puja rituals. So, puja honors deities and symbolizes the quest for prosperity and wisdom. So, families create a serene environment with diyas, floral arrangements, and prayers. So, I think this spiritual focus connects with healthcare and diagnostics. What do you think about this ritual? How are we going to connect this to their sectors?
Yeah. So one of the things about spiritual thing is ghanti, and I think especially one gets onto the other side of 40s or 50s, health of course becomes a priority for a lot of people, and that's where the stock that we think of is there's an interesting stock called GPT Healthcare. It's a company headquartered out of Kolkata. They run about five different hospitals, has about 719 odd beds, but has a capacity expansion plan to get to about 1,000 odd beds. The company has a great return on equity of 21.4%, currently trades at discount to its own historical valuation by 7 odd percent. The forward P multiple is only 16, which is a rarity, especially in the healthcare space that we see right now. And the only issue that the company is having right now is a lower bed utilization. So their capacity utilization is only 42% at this point in time, which they are working on fixing it. But in the healthcare stock, this is one that we find a good value buy, and something which has got great expansion potential, good amount of revenue growth, and something which will consistently keep growing at 18-20% over the coming few years as well.
So, what about Lakshmi Pujan and Kuber Pujan? How are we going to tie these to our sectors and stocks?
Lakshmi Pujan is the main event of
Yes.
Diwali, right? And Lakshmi signifies, of course, wealth. It signifies gold. It signifies silver, precious metals, so on and so forth. The the most important stock in this space is MCX, which is the commodity exchange of the country, where commodity trading is happening, and this exchange is just flying off in terms of its revenue numbers on the back of the commodities like gold and silver trading which is happening. They also of course trade crude oil, and they also are getting into trading of electricity futures as well. The company had an amazing amount of 63% growth in FY25. Projected growth continues to be about 40 odd percent in the coming few years. Has amazing 34% return on equity, ROCE of 43%, some of the brilliant numbers that one can think about. Of course, because of these numbers, the stock is not cheap, but the forward 2 year multiple is 43.5 times. Its PEG is about 1.5. So, something which is still a great, it's not a value buy, but it's something that you can bet on from a growth perspective. Earning quality remains great, but it has multiple growth drivers in place. And with the silver prices going through the roof, more and more people are getting into MCX trading. And again, electricity is going to be a big growth driver for MCX.
So, next is Kuber Pujan. What are your thoughts on that?
So Kuber is the manager of Lakshmi, as you know, right? But if I were to think about non-precious metals, I mean, clearly the equities is the best asset class, and which exchange that one can, there's only one exchange that one can think about which is publicly listed these days, which is Bombay Stock Exchange. And BSE had an amazing amount of growth run over last about a year and a half. The stock had hit an all-time high of 3,000 odd rupees after splits, etc. It corrected down to 2,000. Now the stock is trading at about 2,300. It has made a bottom and it started moving upwards. There were a lot of concerns that people had on, futures and options trading, which drives a lot of income for them, especially the weekly option expiry stopping, and what it will do to its income. So yes, that's a potential hit, but the traders could still shift to monthly option expiry. The stock has already delivered 113% growth in FY25, expected to do more than 35% growth FY26 and beyond. And again, the stock is not cheap. It trades at a 2-year forward multiple of 39 times. But again, one of the great growth drivers and something that I can relate to Kuber Pujan, or Kuber in particular, as to look at BSE as a stock.
And finally, Muhurat Trading. What's your take on this?
Yeah. So Muhurat Trading is very symbolic, and typically one picks the best stock, as part of the Muhurat Trading. So something that we wanted to look at, which has been a consistent compounder, and something which has consistently created wealth, and we expect that stock to potentially create consistent wealth for the investors in future, is HDFC Asset Management Company, not the bank, but the asset management company. We really like the balance sheet profile of asset management companies. Most of them have great ROE. HDFC AMC has an ROE of 32.4%. The company has consistently delivered growth in past multiple years. FY25 growth was more than 28%. Now, HDFC AMC, the advantage is that it has the market leadership. It commands about 13-14% market leadership. There's a massive amount of tailwind with financialization happening in India, and more investors are investing in mutual funds through SIP route. So the money flow continues to be good, even in a flat year of somewhat 2081. So we expect, as the markets recover and as they do better in somewhat 2082, this will be again one of the good stocks to have in portfolio. The upside is slightly limited, about 5% upside. CMP 5476, price target is 5760. But again, a good stock, good quality, great leadership, good ROE, something that will consistently compound for investors in somewhat 2082, and something one should definitely purchase during the Muhurat trading time after Lakshmi Pujan.
That wraps up our 15 stocks for Samvat 2082, each representing an area of opportunity and optimism.
From defense to digital, from housing to healthcare, these themes show the diversity of India's growth story.
Wishing all our listeners again a very happy Diwali, and wishing you a very prosperous Samvat 2082. Please stay in touch with CrispIdea as the year progresses. Thank you so much.
Thank you, Malay, and thank you to all our listeners who tuned in to this Diwali special of Tech Wealth Chronicles. Stay tuned and subscribe to CrispIdea if you haven't already. Follow us on LinkedIn, Spotify, Instagram, and Facebook. And wishing you a happy and prosperous Diwali.
Thank you.